Good afternoon, everyone. I hope you had a great morning and a great lunch, and you're really enjoying iGaming Next. What a fantastic conference Pierre and his team do here. It's unbelievable. I went to the iGaming Next in New York in the spring, and it was just unbelievable. It's almost peerless in terms of quality of conference that Pierre and his team put together, in my opinion. So coming here to Valletta, I knew that we could rely on a quality event with the right people, and it's clearly the case. So awesome. Speaking of the right people and quality, I'm very pleased for us to proceed with this session, which is a subject actually very dear to my heart and something I've been involved with and thinking about and whatnot for a long time, especially at the nexus of ESG and investment, which is really what we're here to plumb and explore. And we have a peerless group here to delve into this subject and come up with some conclusions. So I'm pleased to present you to them. I'm going to ask them to all introduce themselves to you, and then we'll proceed with our panel.
My
Liesbeth.
name is Liesbeth Oost, the Sustainability Manager at Aspire Global.
My name is Mark. I'm a partner at Zampa Debattista.
My name's Steve Myers. I've 20 years in the gaming industry, 13 as Managing Director for Genting for the EMEA region, and now I have my own consulting company, Praxis.
My name's Russel Mifsud. I'm an economist and director leading KPMG's gaming efforts.
Excellent. Thank you so much for being here. Thank you for all for coming. Russell is going to start things off and set the stage for us with a couple of slides that I think are very pertinent for this discussion. Russell, over to you.
Thank you. Well, perhaps just before we move on to the slide, if we're talking about ESG and investment over here, I think the first thing is to delve into what ESG is. So we're looking at the environmental, the social, and the governance aspect. It's essentially the collective consciousness of a firm to be able to understand their impact on the societal and environmental factors. And there are two ways that they're kind of measured. There are a wide range of criteria. It's essentially measuring the sustainability of a business and the impact of a company's products or services on that of society. Sustainability, we're hearing a lot of it, right? It's becoming increasingly more front of mind. Global warming is one of the key things, change or shift in consumers' expectations or perceptions. And that's started to drive things like the UN's SDGs, the Sustainable Development Goals. They've got 17 of them. And that's also driving other things then closer to home when we look at Europe, for instance, and where we're seeing the CSRD. And that is a reporting requirement that essentially is going to be obliging entities, organizations that are either listed or meeting two of the three following criteria, where we're going to be looking at a business that employs over 250 people, has over 40 million in terms of turnover, or 20 million in terms of total assets. So you can see that this is going to start to impact a wide range of companies, and potentially even other companies that fall outside those criteria, and I'll delve into that a little bit more soon. So it is becoming the front of mind. At board level, CEOs are really starting to be more conscious about then their approach to sustainable profitability. Okay? Having said that, there is a bit of a pervasive misunderstanding as to what it is. Okay? And essentially, a lot of the conversations that we've had, we know a lot of companies tend to look at three key areas, which are the most visible areas. They were looking at carbon footprint, we're looking at diversity, and we're looking at responsible gambling. But there are many other areas that will contribute to an organization's ESG strategies. You may be looking at R&D, you may be looking at innovation, you may be looking at talent, you could be looking at your carbon footprint, you could be looking at a wide range of other things that fall beyond the easily visible aspects. Why is it exciting? So this is not just a tick box exercise. This is not something, I fully believe that there's a call to action for the industry. It's an opportunity for the industry to start coming together and having a net positive impact in society. It's an opportunity to move the needle on public perception. We know many times industry is front of line when it comes down to certain policies, which may or may not be driven by empirical evidence. It's also an opportunity when you're looking at an industry that's becoming increasingly more homogeneous. It's an opportunity to be differentiating yourself, so it gives you a competitive edge. What I've got over here, here it is. The important thing is when we're talking about ESG, it's not just your own organization's inputs and outputs. You need to be looking at the ecosystem that it operates within. So essentially, when we're looking at the regulators side of things, so we've identified 6 key areas, okay? The regulators is, of course, a key aspect when you're looking at the governance aspect and the ethics involved. We've argued that there is a bit of a shift or a perception that it's us and them when it comes down to regulators and operators. Regulators work within the same ecosystem. They should have an interest in making sure that their licensees then work in a sustainable and ethical manner. And this is something that we've been kind of pushing more and more of over recent months, we'll say. In fact, I think that regulators should potentially be rewarding or incentivizing organizations within the remote gaming industry to be taking more of a sustainable approach then to their business. That could help also move the needle when it comes down to the black market, and we all know that it is rising. Okay. Even if we were to look at it, let's give a recent example, and Steve will probably touch upon that when we're looking at the happenings with the UK gambling paper and Liz Strauss, and now that shift in potentially putting it to the side. It's potentially an opportunity for industry to be saying, right, let's help get things right before regulators or politicians start to clamp down on things too heavily, like what we saw on the FOBTs. If we move on and we look at suppliers, we've seen this out in the US, you know, let's say if we're looking at, without mentioning names, but we know that the territories that that supplier may be working within may have an impact then as to whether they want to be engaged or the value of that business if they're acquired, or whether they want to even move ahead and have a relationship in the first place. So even when, this goes back to the initial point, even when there are businesses, suppliers, small studios that may fall outside of those 3 categories I mentioned earlier, they may still feel the pressure then to be taking more of a sustainable, ethical approach then to their business, because they may feel the pressure then from their targets. If we look at partners, I was an affiliate about 13 years ago. I believe that the process of onboarding affiliates is still very much similar to what it was back then to what it is today, which is crazy, right? Because the amount of regulation and compliance requirements that have come into play. So, and we've seen the example. Let's say you look at the Lottoland affiliate who had come up with the minor tweak then on the responsible gambling page that the Swedish authorities had come up with, and they tweaked one word and that led to Lottoland page. And so that's something that operators need to be taking more of a conscious approach on. Looking at the customers, we know there's this shift in perspectives, in expectations. It's an opportunity to differentiate yourself. You start to look at Gen Zs, Gen Alphas, eventually Gen Betas then as well. Their expectations, they want to be working and potentially engaging or buying products or services from socially responsible businesses. If you look at employees, beyond talent attraction and retention, you're also looking at the diversity side of things, which we've heard a lot of. But we still see a massive gap within the industry. And I think that there was a thing from McKinsey that had a report where they said that the top quartile of businesses that did have that balance performed 25% better financially than that of those on the bottom quartile. Swedes are pretty good at that, but we're still seeing a massive gap. The last thing then as well is on capital markets. So whether it's for raising finance, okay, we know that banks are encouraging or incentivizing businesses to take on ethical measures. So there's a reduction of 2 to 5 basis points. Even me, myself, if you're looking at A+, where they've got the APS, where they've got their green loan and 1% for 5 years. But equally so, even when you're talking about capital markets, transactions that happen, we've seen, I think, an impact of 14% on the multiple based on a beat, when it comes down to taking on more of a focused approach. Just conscious of time, I won't dwell on this next slide, but I will perhaps keep it up. The idea behind it is that it's a materiality assessment. We had carried out a bit of a study to understand what some of the core aspects that operators and businesses within the ecosystem tend to keep close to heart. Okay.
Very good. So these are really important points, Russell. That was a great framing of what we should be talking about here today. And, you know, it's funny, this sort of milieu as regards gaming first came on my radar screen with Sweden, looking at NASDAQ, Stockholm listed entities, and the massive shift. And I think it's fair to say we're going to focus on your last point, which is investment capital markets, because I think we all have a perspective that's fairly unified on that we want to elicit feedback on, but communicate. But in Sweden, all of a sudden you had all these gaming names that were doing very, very well, and all of a sudden ESG investing priorities came in with respect to institutions' direction of capital and allocation of capital, and suddenly these games were massively negatively impacted, probably because the industry was caught by surprise and didn't get ahead of it. But at any rate, this was a really prime example. So maybe, Liesbeth, you can share with us how that all came about in Sweden and what the impact has been and your analysis of that.
Yes, I think the recent developments, if we look over the last few years, we've seen a shift going from sustainability as more of an afterthought than becoming more like a cornerstone of a company's business and executives taking it to a higher level. And this is, of course, because there's more also pressure from the outside. And institutional investors have been excluding gambling stocks for a long time, and even more so in the Nasdaq in Stockholm. So besides running a sustainable business is the right thing to do, it also hits in when it comes to investment and overall all of your stakeholders. Investors are more talking about it. They take it into account in their overall analysis to see whether they see growth opportunities in a business. And when we look at the stakeholder slide of Russel, it's the purpose has changed of investors. Previously, they were looking more at short-term financial gains, and nowadays we see more a holistic approach. They want to look at the overall well-being of all the stakeholders, which does not only include the shareholders, but indeed the partners, the suppliers, and very important as well, the employees, the society as a whole, and the authorities. We see it also the UKGC talks a lot about sustainability and how it helps companies, and companies have been adopting this more and more, looking longer term instead of short term. This is also because the industry overall is maturing, and they have the ability to do that. And yeah, the company I work for, Aspire Global, is listed in Stockholm, but now since I've been acquired by Neo Games, they will be listed under Neo Games in the New York, as both they are very highly established stock markets focused on ESG. They are expecting from us to work in a certain way. They have ESG databases and rankings, and I work a lot with the markets to improve ourselves every year. And how do you embed all of that into your business model, right? That's a very key,
How do you do that?
Question. Yeah, it's not an easy task because you can talk about hundreds of different sustainability topics, but the key here is to really analyze your business. What does sustainability mean to your company? And there you can find the materiality analysis really helping you. And if you can find out, like in the graph, like how can we impact what is most important for all of our stakeholders versus how much impact do we really have? And then you will take the topics where you can really influence. And obviously in this industry, there's a high focus on responsible gambling, responsible marketing, the people topics, and also the safe digital environment. So at Aspire, we have focus areas: the environment, safe user experience, people, and safe digital environment. And we focus the material topics underneath of that. And every year we set indicators and targets, which we publish in sustainability reporting, and we work towards improving ourselves. And here,
What are some of the key indices and measurability aspects that you guys look at?
So from the environment part, we look at carbon. We analyze with an external company how much CO2 we produce, how we can be more efficient. We set targets. We want to improve ourselves. We also offset what then is left in the end. From responsible gaming, we focus on how we can protect the player even more, how we can use more of technology, AI, machine learning systems to really focus on the player to make sure they don't gamble more than they're comfortable with. And the people topic, the diversity topic, create more awareness and knowledge, and I work a lot with HR as well to improve ourselves. And on the digital part, of course, Aspire is mostly B2B. This is very important that the system is reliable and trustworthy when it comes to safety issues and privacy. So,
Other comments on this? How do companies embed ESG into their program, and why is it important?
I can give you an example why it's important. I was working with a private equity company last year. We were looking at an acquisition, and the company we were trying to acquire had a fine regulatory settlement, I think. And I've heard a lot of people say, well, that's just the cost of doing business on many occasions. Well, the cost of that was we couldn't balance off the risk associated with the multiple they wanted, or with the multiple we were willing to pay. And in the end, we walked away from the deal. So if you're looking at investment in that particular industry, then I think you see lots more issues where the due diligence process becomes far more detailed. You'll go into things like recent acquisitions. Are there any skeletons in the cupboard? Have they played to regulated markets or grey or even black markets? A whole host of different issues will come to light. And what that really means is, and why you should think about it, is because if you're a shareholder or you work for a company, then there's a direct correlation between value that will happen in future more and more based on ESG issues.
Interesting. So going on the offensive, in effect, getting ahead of the issue, weaponizing ESG in favor of good investor relations, good internal relations with your team, good relations with your market. So Russel, you've obviously, from your excellent slides and beginning of this presentation, you've dealt with a lot of these issues. Can you give us some examples of enterprises that you think are excellent in the ESG area? And can you also perhaps comment on how the market should be thinking about weaponizing ESG instead of being on the defensive?
Sure. So we had done some research on certain organizations that were apparently excelling at ESG when you look at the rating. So if you're looking at like Sustainalytics or Refinitiv, the struggle, and I know that Mark's going to be delving into that as well, is that it's not clear cut right now. You can't be measuring apples with apples. The data that may be measured may differ from one organization to the other. We had found, and if I give an example outside the gambling industry, but also one that's often kind of close to the gambling industry, it's the alcohol business. So Diageo, for instance, scores super highly. If you look at like Flutter, 888, Betson, Kindred, they all kind of operate or seem to score within the middle, which is pretty good. But there are so many factors that need to go into consideration when it comes down to weighting out how effective an ESG strategy is and the net positive impact that it may be having on society. So if you look at things like governance, and you look at Refinitiv today, they may be giving certain organizations, scoring them 100. I mean, I'd stop and I'd say, how can you score 100 on the governance side of things, especially in this day and age where you've got grey, light grey, dark grey, potentially black, you've got white, you've got fines coming out. So the systems that are measuring right now aren't clear-cut. And I think working on Liesbeth's point then as well, being able to identify and start to harmonize the measurements. It's one thing that Kindred does very well, right? With the journey to zero. They're very transparent with their approach. They're very articulate about the parameters that they're working within. And that's comforting. But I think the point that we need to be looking at is, from an investment angle, it's not enough to have one red shiny apple. You need to be looking at everything collectively. You may score high on 5 of the areas. If you fail on one, it's going to draw you down. That's going to have an impact on your investment, particularly if you're looking at, if your eyes are on the US, for instance.
Interesting. Yeah. So, Mark, throw it over to you based on Russell's comment as well. Why are some market participants skeptical about ESG? And what's your analysis of, what do we do about that? And how do we, again, weaponize or go on the positive around the benefits of being proactive around ESG?
Look, whenever some regulation of this magnitude is introduced, in this case, a series of legislation or regulation, there's always going to be some form of skepticism, right? Especially in this case when there's so much riding on it. As you start to see, banks are, for example, going to be offering better interest rates for companies which are ESG compliant or ESG compatible. There's more funding available for companies which are considered to be ESG compatible. For example, there's the EU funding, which we assist our clients on this year, is already being introduced. If the company is seen to be ESG compatible, then they're eligible for a higher level of funding than another organization. So because it's so big, there's always going to be skepticism. And I think trying to narrow them down to a few points. First of all, by introducing E, S, and G in one acronym, in one way, we are putting them all at the same level of importance, right? Environmentalists will argue that if we have to take a step back from the finance world, from the gaming industry, and look at what the human race is facing right now, the biggest issue is the rising temperatures, right? So shouldn't we be focusing more on the environment or the emissions, effectively, rather than putting the social and governance, which are, okay, very important too. So the environmentalists are worried that by putting them all in the same boat, we're actually delaying the immediate impact. We need the immediate response to the environment that we should be doing. Another point, which Russell already touched on slightly, is that ESG is effectively creating a score for an entity by setting KPIs, determining whether those KPIs are met, and then attributing a score to that. From an environmental point of view, it might be quite doable, all right? So you can measure the carbon footprint, you can measure the water consumption, you can measure a host of things. But how do you measure the social impact? How do you measure responsible gaming? How do you measure tax transparency? So what, the higher the tax, the better your score? So does that then go against tax efficiency and tax planning and so on? So it's quite uncertain. People are also concerned about greenwashing, which is essentially where you tell your investors or the stakeholders that you're being environmentally kind of conscious, but we kind of not actually the truth, right? So, I mean, the extreme case is the Volkswagen case. So are we going to see a lot more companies doing this? There's also a concern that it's going to be more focused on the reporting part of it, okay? Having the glossy reports, having the big 50-page documents, rather than embedding the ESG, the culture within an organization. You're actually focusing on what you're telling the investors, what you're telling the market, in order to have a better valuation of your organization. Mm-hmm. So these are all. I could go on forever. How can the gaming industry kind of take this as an opportunity? Okay, so in the gaming industry, I think the main pillar, which is crucial for gaming companies, is the S, right? It's the social part. We can't forget that the environment and the governance are also important. Okay, but probably the S is the most important, especially when it comes to safe betting, responsible gambling, and so on. So I think the gaming industry needs to. It has already made large strides forward, but continue to work towards showing the general public, because in certain segments of society, it's still seen to be, a bit of a dangerous area. That they are the leaders in ESG, and actually use ESG to change the perception of the industry. Also, for example, from a gender equality point of view, I mean, the gaming industry is still a male-dominated industry. Could it become the leader in gender?
Interesting. Any other comments on that particular subject, particularly the opportunity side? How do we turn this into an opportunity? I know a lot of you have thought about this when you're talking to your colleagues, your clients. What comes to mind that are some obvious things that operating entities can do?
I think the opportunity is in our hands, because what we just talked about is that frameworks that are existing focus a lot on the E, but the S and the G, which mostly the S is very important to our industry, it's hard to measure. It's mostly qualitative data and not so much quantitative, like measuring your emissions. So how do we measure responsible gaming? And this is where the opportunity is. We have to get together and see how we can measure better what we do and how we improve and communicate this. And I think this would help the conversation, the dialogue amongst the industry, and also be more transparent about it, like set goals. Reflect every year on your goal, like have we improved or not, and why can't we make this kind of information public? Because this is how we can analyze ourselves and we can be transparent to our investors and all of our stakeholders.
I think it's important that we don't wait for the regulation to be clearer and to see what the other people are doing, because that it's easy to delay and forget that time is passing very, very quickly. So I think the immediate attention should be at actually assessing what each company, each organization is doing now, because that's your starting point. So if it's from an environmental point of view, it's no point saying in 10 years you want to be doing this if you don't know what you're already doing now. So this is base point, the starting point. If you want to, I think gaming companies should need to look into each and every pillar and actually understand what they are currently doing today. Or else the goals could be unrealistic or already being achieved, which is also an issue.
Yeah, I think if you look at someone like Entain, they've taken a very broad brush approach in terms of ESG. I mean, as an industry, I think we're pretty good at the E. We're a very highly regulated model generally, and we can tick boxes like no one else. But the S and the G will be the issues that bite. And that might be, and my particular soapbox piece really is to do with non-exec and independent directors and how their role will change and should change, because down the line I can see, activist investors and others coming in, and when they're trying to disrupt something in a company to extract their own value from it, I think they could be in the firing line. So I think they need to be very careful in terms of the way they go. Just going back to the Entain piece, they've got a few headwinds at the moment with Australia. They've had a massive fine from the UK Gambling Commission. But you have to start a journey somewhere, and you have to plot a course. And to me, as a tier one, I think they've sort of led the way in terms of that. They brought in their responsible gambling platform, because responsible gambling does make us the sin stock of trading. And also, we can't hide from it. It's a reputational issue that always comes back to bite. So they've got that, but they've got the other streams in terms of the diversity and inclusion and everything else that's going on. They've also said by 2023 they won't be playing to non-regulated markets, and that's, again, an important point, because they're licensed in numerous jurisdictions, and I've got personal experience of having to manage one jurisdiction over another. It's not easy to do with varying requirements if you want to maintain that sort of share price and everything else. So whilst they got fined £70 million, the highest fine I think the Commission's put out, what you need to realise is that audit was done nearly 2 years ago, and their share price fell when it was announced originally, and then their share price fell when it was announced again that it was happening. So we need to be more transparent. We need to fight back in some ways in terms of getting the message out there. There's been a lot done in the last 18 months within that company, and they are on a journey. And I think personally that, I see more action from them as one of the top tier companies than others. Kindred as well, but I sense they need to broaden it other than just the journey to zero. And they're two examples, I think, of that will start to filter down into other companies and should do.
Very good. So, Russel, given your background, maybe you could share with us a little bit about what you've seen in the last few years, particularly in the S and the G. We've been talking about there's tools and indices and various things, and certainly a lot of discussion every conference. There's organized bodies around RG and so on. Has it been effective? What more can we do as an industry? What more can companies do, and why should they do more?
So I think if we look at another industry, if we look at video gaming right now, which is widely unregulated, but loot boxes that we see in certain territories, we are seeing a call to action where they are trying to take more of a sustainable approach to engaging their players, because they are fearing what regulation may do if they don't take those necessary steps. So I think working on Mark's point, it's not a matter of let's sit and wait and see what happens. We need to be taking on those initiatives as soon as possible. Now, what are those initiatives? You're sitting on a lot of data. Every operator is sitting on a lot of data, a wealth of data. That data could tell a lot of different stories, but it may require then a fair amount of R&D to be able to find the story that you want to be telling and what you want to be aspiring to when you're talking about your ESG strategy. I think, because I'm conscious of the timing, the call to action over here is, it's an opportunity for the industry. I've never seen as good an opportunity for industry to start coming together, to start to address the elephant in the room. We keep on hearing things on like affordability and problem gambling and all of this. But we know the elephant in the room because somebody else can go off to the black market. They can go to another thing. It's a different game to that of land-based. So it's an opportunity for industry to start setting these best practices to potentially set the future of what sustainable profitability could mean. I think it's an opportunity for industry, particularly the gambling industry, to having more of a social contribution and net positive impact. How great would that be? Yeah, to be able to say, yeah, gambling, and this is what we've done. We've done this, we've done that. And I think the more collective that message could be, the more powerful, rather than just doing it in isolation. Talk about associations. That's going to change. It's going to change perceptions, not just with regulators or politicians, but also with your customers, with your employees, with your effectiveness, with your acquirers, with your banks, etc. It's that differentiation right now. There is that element of game theory, prisoner's dilemma, absolutely, where you're trying to say, if we take the sustainable approach, what's operator B going to be doing? Are they going to be taking up then the slack over there? That's why, once again, it needs to be that collective consciousness that is going to be involving a number of heavy-duty trailblazers, in my view. It's all about that socially conscious approach. The world is changing, and we're seeing that, once again, you link it to the US. We know ESG isn't as big right now over there, but I certainly believe it will be, and that'll be the differentiator going forward.
Yeah, and you're going to have an experience with that listing in New York, because ESG is different. It's has a different nature, but it's ascending.
Yeah, and I want to make a point here because sustainability is not the same as compliance. I mean, we need to be compliant, otherwise we don't have our licenses in good standing, which is not sustainable in the first place. But where I see sustainability comes in if you go the extra mile, and this is also what prepares you for the future. If you are having a sustainable company, you have already many things incorporated in your business structure, in your operations, in your technical work. When you want to go to a new market or a new regulation is being introduced, you are already there, you're already prepared. So I see sustainable as looking ahead and being there, already incorporating it now before we need to have it as a regulation. And another point, what is very important when it comes to sustainability is that it's carried from the top. If you don't have your board and your executives behind it and talking about it and incorporating it in their business decision on the weekly management
As opposed
table,
to checking the box.
Yeah.
We have a
Yeah.
person who does that. The leadership needs to live
it.
this.
you
Yeah.
need to put it in
Exactly.
the DNA of all the decisions, because otherwise my job at the
And,
company...
and your job might be to quantify the value of doing that,
Yes.
or qualify, but that needs to be there.
Yeah, and for example, the structure I work in, I report to the Sustainability Committee, which has board members and members of the management team. And this works well because we cross-check, we keep each other updated about how the company is doing on our goals and our targets. And yeah, I'm very happy with that way of communication and
So,
how
so
it's carried.
a quick question, and maybe Mark, you can start with this, but I welcome the other panelists to cut in on this. So we're sitting in an industry where you have the unregulated market and the regulated market, and we're sitting here in the main, jumping through hoops to try to satisfy regulators, shareholders, employees, customers, stakeholders generally, and then we have the unregulated market. How do you consider unregulated and its impact on ESG in the regulated market?
Not sure how to reply that one. No, I think that I'm not sure if anyone wants to jump in first.
Okay.
I was going to
We have seen some recent examples, right?
Russell made the point about transparency. The industry is very reluctant to share its data.
Yeah.
And I think until it does, it's not going to be able to fight these things. I mean, I was talking about the American Gaming Association earlier, and it was basically primarily land-based at that time, but had a number of big egos. But what they did, they got together and agreed on a set of principles that actually became a very powerful lobbying tool. We're nowhere near that, particularly in Europe with iGaming, but it's needed. And so Kindred doing their journey to zero, using their data, why don't they make it open to other people so that everyone can have an input in that? And it's a much larger pool, and you've got academic methodology behind it that you can use, and then all the people that say, oh no, we don't agree with this. So the Betting and Gaming Council in the UK commissioned PwC to do a report on the black market. It was actually quite a good report. Because the Betting and Gaming Council sponsored it, it just got shot down, just got completely shot down. So I think transparency is important, and the industry needs to round and get together so that they can actually start to do something about, so people understand what is a regulated market and what is an unregulated market. I don't see us doing it anytime soon, though.
Okay. Mark, did you want to make a comment on that?
Not really.
Okay, very good. So this is a very interesting, important discussion, but alas, our time is coming to an end. So I don't know, are there any quick questions or comments from the audience, or anyone want to posit a position? Because we'd be happy to entertain that. No? Okay. Oh,
Yep.
Here we go.
So
Definitely.
I was having a good
So
conversation.
I'll repeat the question. The role blockchain might play in this, which is a very interesting and important question.
I was having an interesting discussion yesterday. We've probably all seen the likes of N-Chain and Warren with W2 trying to come up with initiatives where you have blockchain to be able to tangibly trace then the affordability of customers. So it's not just on a siloed basis and then they can go off to another operator. What they're working on is trying to work on a comprehensive way of doing it, where you're not overburdening the customer and asking for all of these documents along the way, which may intrude on privacy or make the black market far more attractive, which is what we're seeing today. So blockchain could be a good solution to be addressing that. The struggle is, it goes back to game theory. If you're going to take that on, if you're going to be a select group of operators that do it, you need to be banking on the other operators who are also going to be doing it. If you pass it through to suppliers and want the suppliers to be passing it on to their clients, that's potentially going to have an impact, because other operators may say, we don't want to have that in truth, although we talk about it, we don't want to have that for that particular market, so let's switch it off. You can't cheat blockchain then. So I think it's a potentially really exciting area when we start to see the technology behind what an audit trail can do, and we're seeing it in other industries. But it comes down to how serious you want to take responsible gambling, in the end, and I think that's the crux of it.
Very good. Thank you very much to all of our participants, and thank you for coming.
Okay.
Yeah.